Alright, good afternoon everyone. Today is 12/12/12. It is December 12th, 2012. It is Wednesday. This is, well, let me give you the results first, okay? Crude oil were plus 6 ticks, gold were plus 3 ticks, and soybeans were break even on. I'll go over all the trades that I took in those markets in a few minutes. Before I do, I want to suggest to anyone that is not taking the free trial with us, go to www.cfrn.net/apply, sign up for the free trial. In the free trial, we only ask for your email and your name, and we'll send you an email with links in it that will show you how to download everything that you see here. Okay, you'll be able to download all of our indicators, the charting platform to run the indicators on, and you'll also get 5 days in our live trading room. In the live trading room, we put on trades live in front of you. We tell you when trades are setting up. We teach you how to see the trades coming, sort of how to anticipate what the market is going to do. To the best of our ability, we do all that stuff for you for free for 5 business days, and then it's up to you to become a partner or not. For those of you guys who are partners meeting tomorrow night, 9 p.m. Eastern Time. Those of you guys who are on the free trial who may be considering becoming a partner, you should have something in your email with the information required to become a partner. If you do not have that in your email and you want it, just send us an email. Send us a quick email at support@cfrn.net. Okay. Once we get that email, I will be able to send off to you very quickly all the information required to become a partner and get you in there. All right. All right. Herbert, I'm not sure what that means, but all right, I'm going to get right into it now. I didn't trade anything on the indexes this morning. We've been in a 4-point range or less from the open. What I did point out was the 2 opportunities. If you were ignoring the weekly trading zone, which is right here at 30.31 on the ES, you could have shorted it right here and shorted it again right over here. Okay, actually not there, right down here. Shorted it again. But the volume is so low and the range is so tight that there is no reason to trade anything in there. And it actually goes against all my rules, trading the ES at the weekly trading zone. Alright, so we didn't trade any of the indexes. Well, we actually traded the NASDAQ a little bit right at the beginning, but we ended up taking a break even on that. I'll jump into the NASDAQ a little bit, but before I do that, actually, no, not before I do that. I'll just jump right into the NASDAQ. All right. Let's see, the one trade that we did take, where was it? We took one break-even trade, I thought, on the NQ. I don't see it highlighted in here. But anyway, I'll go over the trade setups, okay? What we're looking for here on the NASDAQ, actually on any 4-tick range chart, what we're looking for is a bearish cross of the MA1, which is this blue and red line, down below the BBC, which is the green line. When you get that bearish cross, you anticipate that price is going to come back up. Try to find some area of resistance, okay? Right in there. That area of resistance is usually supplied by the BBC, which is this green line right here. Now, to get the MA1 on your charts, you go Indicators, CFRN, CFMA1 to put the BBC on there, CFBBC. Okay. Once it pulls back up here, you check to see if you have divergence down here. Now, divergence, this would be a divergence that I would trade right here. This one right here, because the cycle portion is going up, is blue and headed up, I wouldn't look for the down short here. In this case, I would look for a close down below the trend line, which happened right there. Okay. Let's see, we didn't trade anything in here, but what I would have done had there not been a weekly trading zone on the ES right below us is short right here. I would have shorted right here with an 8-tick stop, and we probably would have been looking for profit. 1 tick above this swing, which happened right over here. Okay. Once that happened, there was another opportunity to short it again. Right here on this down close below this trend line I just drew. Right there, because we didn't have divergence down here. We could have shorted again right in there. Okay, and that goes on and on and on and on, all the way through the day. You see, I drew a couple more trend lines in here as things were happening, but I wasn't really focused on the indexes today because they were stuck. Well, the ES was stuck at a weekly trading zone. Okay, so just looking at this right here, here's our bearish divergence right here. Here's our bearish cross, the pullback and test to the BBC, the down close, bearish divergence. You would short this one right here, all right, for the move down. This one right here, you have bearish divergence, but the cycle is heading up, so you wouldn't do it until you got to close below this trend line that I just drew. All right, so you would short that one right in there. All right, now it's gone up through the BBC, so we're looking on the other side right now. All right, you don't have the bullish divergence yet, so what you would look for is a close above this trend line so far. Okay, I wanted to be pretty clear about all that. We didn't take any trades. Well, I think we took one break-even trade, but I don't have it outlined. But we are break-even on the NQ for the morning. Okay, now it's going to be the same across all the 4-tick range charts. I'll show you the trades here on the soybeans. We took a few trades this morning on the beans. All right, we started out right here on the soybeans. Same thing. Bullish cross right here. MA1 above the BBC. Price came back down. Found support at the BBC. We had bullish divergence. I got long on the up close. I took a cent profit on that one. And it kept moving up. That was pre-market. All right, once the markets opened up, I did the same thing over here, but I waited for the close above the trend line right here. I waited for that close above the trend line because we lost our divergence. We were losing the divergence. That turned around and stopped me out pretty quick. All right. The next one that I did was right here. We had the bearish divergence here, and it stopped me out pretty much to the tick. Came back down to break even, and then it reversed. So I got profit here, stopped out there, stopped out there. I missed this trade here for a little bit of a long trade, but I took this one down here on the close down below the trend line. Okay, let me draw that trend line on there for you. I'll blow it up a little bit so you can see it a little better. All right, the trend line's already on there. It's just hidden by the arrow. All right, hold on a sec. Let me just move that arrow out of the way. There's the trend line right there. So on that down close below the trend line, I had shorted it, and all the loss that I had on these two right here, I made it back on this one move down. All right. Now the market then turned around and it started to move up. I missed all this stuff right here, but it turned around and it started to move up. And here's the trend line right here. So you could have gotten long, captured that right in there. If you missed that one, you could have jumped in again up here. Okay, right up in here. Plenty of opportunity in there. All right, that was the soybeans. So we did trade the soybeans a few times this morning. We ended up break even on them. Okay, the NQ, we were break even on the NQ. The ES, we were break even on. We didn't take any trades. YM, we didn't take any trades. This is the British pound. Now, one of the partners in the room this morning said to take a look at the pound because it was moving. When we did, we had said, okay, well, this is the trend line. The close down below that trend line is right there. We're also right at the weekly trading zone. What we had said is we expect it'll probably pull back up to the BBC up here, and then we'd get some divergence with that. I had said that this right here looked like it was about ready to bottom out. I had drawn that trend line on there in the morning when we looked at it, and so far all of that's pretty much happened. But that's the pound, and the pound is pretty much not moving right now. Okay. Let's jump over here to gold. We did take some trades on gold. We missed a whole bunch on gold this morning, unfortunately. This big move down here, we ended up not seeing it for the most part until it got all the way down here, and then we put a trade on and we ended up taking a break even on the trade. We did get short up here and we took some profit up here, but you see I had drawn in these trend lines, but I think I had drawn them in after the fact because I didn't see this big move down, or I would have gotten into it. Now when I say I didn't see it, it's not like it was a huge period of time there. We did get into this one and it moved down, and I saw that I missed some opportunity over here, and then it went sideways for a little while, and then right here at about 10:30. This is when the crude inventories came out, right in here at 10:30. I had missed all this. Okay, That was from 10:30 to 10:40. So it was only about 10 minutes that I was looking somewhere else or trading somewhere else or doing something else. But there was plenty of opportunity in there, and then as it started to move back up, there was plenty of opportunity on the upside. Okay, we went on break right here. Right here is where we went on break. But in here you could have traded there, you could have traded there. Over here. Now when I say you could have traded, these are all spots like this. Right in there. And in here. Hey Frank. Let's see. Okay, and over here we had, this time is at 12:21. Man, where does time go? We had that on the way down, that, and that. All right, so there were, and there's a couple more in there on the way down that you could have jumped in on. All right. Now, when we get divergences on the over here like this, when you get a divergence, what you expect is that the green line is going to work its way down into the cycle. That's what we anticipate here as well. One thing worth noting about where it is right now is that's the trend line of these little bottoms. It's going to have to, in this move right here, it's got bearish divergence right now, so it's possible it could come up here, hit the BBC, and give you a down close, which you could trade. But it's also looking like it could go right through the BBC, given this information down here. All right, that was gold this morning. We ended up plus a few ticks on gold. We didn't trade the Russell, and we did trade crude oil. Now, let's see. Where did we do all this on the crude? Here we go. On the crude, prior to the open, there was a big move up here on the crude. Once it opened up, at 9:30 Eastern, we took our first trade here on the crude. We made some profit. We gave it back right here. I think we made, we made some profit here, and we ended up giving it back right here, and then we made it back on this one, and then I ended up missing everything. Now, right here at 10:30 was the crude inventory numbers. You see all those bars came out, all these bars came out in 1 minute. From there were more opportunities in here on the short side, and then it turned around and gave opportunities on the long side. Okay. And that's it. The 4-tick range charts are traded the same way across all the 4-tick range charts. All right. All the charts, all the same setups, all the same indicators, all the time. And as a matter of fact, the same number of ticks risk. Here's the Russell right now. This just happened on the Russell. Okay, it pulled back up, tested the BBC, gave it down close with a bearish divergence. So on the Russell, you would have gone short right there. Okay, expecting it to get down to here. What time is it now? 12:23. We had in the in the live trading room this morning, there was a question, and I tried to go over it step by step, and it just so happened, I was showing it on the soybean trade that I had taken, that first one that I had taken. After you get the bullish cross, you wait for it to pull back down, and just as I was doing that, it actually happened on gold. So if we go to gold and we look at 940, I ended up missing the actual trade, but I highlighted it because I was talking while it was happening, and I ended up missing the actual trade. But the bearish cross, the pullback up, tested the BBC with the bearish divergence down here. And once you got that down close right there, I had said I expect it'll get down to here at least, which was 9 ticks, I think, from the entry. And it shot right through that, and it gave another opportunity right over here. Okay? It's the same thing over and over and over again. You see the same thing that I just did over here, or the same thing that I was talking about doing over here anyway when it was happening. On gold, we had done right here on the soybeans. Opposite directions, but the same exact setup. Okay? So what I want everyone to take away from this is you have a set of indicators, you have a set of rules, you do the same thing all the time, over and over and over, no matter what market you're trading. Okay? And with that, I'm going to wrap up the recording, because I am. All right? If anybody has any questions, support email us at support@cfrn.net. If you haven't taken the trial, go to www.cfrn.net/apply and sign up for our free trial. If you're on the free trial and you want to get into the partners meeting tomorrow night, send me an email, support@cfrn.net, and I'll tell you what you need to do. All right? That's it. Gonna wrap it up.